Hello, James Wang, and welcome to the Tech Fun and Techies podcast. I'm so happy to have you here.
I am very happy to be here. Thank you, Sophia.
So when your PR reached out to me, one of the things that I found really interesting in her message was that you could talk to us about deep tech investing versus ordinary tech investing. And I thought, well, this is really interesting. I'd love to explore that with you. So you are a venture capitalist investing in deep tech. Could you just begin by telling us, like, what is deep tech? What kind of stuff do you invest in?
Yeah, totally. I mean, deep tech has evolved as a term over time, but I think people have mostly started to standardize a little bit partially because BCG and Hello Tomorrow standardized the definition a little bit. It's AI robotics, synthetic biology, and advanced materials. So it's a lot of these things that have more interaction with the physical world and end up having basically a very frontier technology required in order to actually make it work. One of our firm's points and theses is essentially that a lot of these technologies weren't actually viable before around roughly the 2013, 2016 timeframe. If you look, that's when AI started hitting human levels of capability. That's when you saw a steep drop in terms of sequencing costs, and CRISPR started to become more widely used. And in terms of some of the climate technologies and advanced materials, we were starting to see a lot of revolutions and changes in how we actually do that. So that's roughly what deep technology is. And I think, like you were saying, it's quite different from investing in what we've generally invested in within the venture industry for the past 2 or 3 decades, well, 2 decades-ish at this point.
Mm-hmm. And so could you tell us what is, actually, you know what, before we continue, you mentioned synthetic materials. I'm quite interested. What could you give us some examples of what that is? Because I think I have some ideas, but I would like to hear your view.
Sure, absolutely. I mean, there's a number of different types. One is that people are probably familiar with is carbon fibers and whatnot, and ways of actually weaving together and creating carbon fibers. It's traditionally actually quite expensive and difficult to do, which is why it's generally only used was only used pretty much in large quantities in airline, airplane manufacturing and some of these more cases where you need a lot of strength and whatnot, but there are a lot of interesting polymers being created. There's a lot of interesting biological materials being created. But one example of a company that we've invested in that's a very different type of materials creation is a company that does low carbon cement. So essentially, they're able to do cement that works just like normal cement does, very important for construction, but so without limestone, without a lot of the different additives that you normally need to make it, which makes it much cheaper to create. Basically, you throw in rocks and sand, you do a geopolymer process, and suddenly it magically works just like cement does.
Interesting, because I used to run a fashion tech company, and in the fashion tech space, there's a lot of innovation to basically create lab-grown leather. And so I know a few startups who are essentially working kind of various different stem cell type of research to basically create really high quality leather and then to try to sell it on to the likes of Chanel and so on. So that's very different from Chanel, very different from cement. Rather, you see, I've got Chanel in my mind always. Any sponsors listening? That's what gets my attention.
There we go.
But in terms of synthetic materials, both the cement and the luxury leather, they are under the same umbrella. Is that correct?
Yeah, because a lot of the ways of creating them, a lot of the different chemistry advanced processes, and in certain cases, when we're talking about leather, we're talking actually about that merging with synthetic biology, where some of these things start to become, let's figure out how to program cells, how to program yeast, how to program bacteria, whatever it is, to actually create this material that we couldn't otherwise. It's actually an interesting revolution as well in pharmaceuticals, which, not to drift too far off track, but traditionally, a lot of pharmaceuticals were all small molecules, so basically chemistry. Nowadays, there's a lot more drugs and other things coming out that are biologics, which are biologically active. They're proteins, they're cells, there's different things within it, and you actually need to grow those. So the way of actually creating these drugs has radically changed, and at least right now is radically more expensive, but also opens up a lot of new avenues. So there's a lot of exciting things happening within that particular area.
So now can you talk us through the difference between deep tech investing and normal tech investing?
Right. And I think it's helpful to also define normal tech investing
Exactly.
because,
Yeah. I was thinking
right,
software because, is ChatGPT going to be in the same kind of category? Like, I don't know, uh, a delivery app for food or like laundry? I
right.
would say probably not.
Yeah, definitely
What's
not.
your view?
It's yeah, a lot of traditional investing at this point has been within, yeah, software,
Mhm.
marketplaces, platforms, all of which are for the most part enabled by software. Because you can argue, say, oh, Uber and Airbnb have manifestations in the physical world. They do,
Mhm.
but it's a asset light model for all of these
Mhm.
things in terms of MBA talk. They are platforms that connect things together. They're
Yeah.
software in essence. So how software typically works is that you can rapidly iterate on that. So one of the things for traditional venture capital that has been sort of a mantra for a long time is it's all about the team.
Mhm.
And don't get me wrong, like we care about teams as well, but there's a difference between deep tech investing and software investments or software related investing, especially where for software you can change very quickly. So
Mhm.
let's say the team got the market completely wrong.
Mhm.
Okay, that's okay. Change the code, like change the Google AdWords target, and next week you're in a new market. It's not quite that simple, but it's kind of close to it. And that's one of the attractive nature of investing in software. You find a great team, they'll figure it out.
That reminds
That
me of
doesn't,
Slack. Like for listeners who don't know the Slack story, I'm sure James, you know it. They started off creating an online game, and they just had this Slack as a tool, basically as an internal communication tool. And then they saw that the game wasn't going anywhere. I think they were like the only people who were playing the game. Um, but their developer friends in Silicon Valley were interested in their communications tool, and then they were like, "Oh, actually, let's sell this thing instead." Which I think is just a really good explanation. It's a really good case study, basically, of bet on the right team, they will figure it out. But you're saying that's not the case in deep tech.
yeah, it takes too much capital and too much time to actually change what you're doing there. So it's obvious within the advanced material space. It's pretty obvious within synthetic biology in terms of, again, biology, genetics, these other things, why that would be the case. But that's even the case with AI, which I think most people think, well, it's kind of software, right? Kind of true. But if you look at it from a business perspective, software, you change the code, you launch it, you're done. You can keep iterating on it. AI, ChatGPT, like some of the ChatGPT 3 and whatnot, millions of dollars to actually train the thing before it actually went out to serve a single user, right? It actually looks a lot more like traditional capital intensive industries like semiconductors, in terms of to put a lot of capital in, get the market, get the thing right, and then go to market. And you have to spend a lot of money before you ever actually make any revenue. That's what a lot of these technologies look like today, even AI, which comparatively seems lighter, but also acts much more like semiconductors, acts much more like these other technologies than it does software.
So I'm curious here because I can see how that's the case with generative AI, which really needs, a lot of training. But
Hmm.
what about with much more simple AI, which is, kind of a slightly more difficult version of just like multiple linear regression?
Right.
So isn't it like not all AI is created equal?
Yeah, and this is an interesting distinction in terms of it because generative AI and discriminative AI, which is the other version of it, not discrimination, but discriminative AI in terms of just figuring out
Woke
the difference.
AI, like cancel culture AI and woke
That's right.
AI.
In terms of it's actually a little bit blurry in terms of the lines between generative and discriminative. It's more of a like from the math perspective of what the difference of them is, but roughly you can sort of think about generative as trying to make something look like the statistical distribution.
Hmm.
And for discriminative, it's trying to see, is this different from this statistical
Hmm.
distribution? You still need to train the same distribution. So I think the difference is less along the lines of, well, generative AI is very different in and of itself because you still need to train the
Hmm.
distribution in essence. The real difference is how good does it need to be? And so in terms of multiple linear regression and typical things that we use in business processes and whatnot, if it's okay, it works, right? Like if ChatGPT works okay, though, it looks terrible. So
That's
I think
that's a good
it's a
point.
level difference.
And I guess kind of the quality of decision making, like, creating a matching algorithm. Yes, it's hard, but it's not that difficult. And at the end of the day, if a particular match doesn't work, yes, swipe left.
That's right.
But, yeah, I mean, uh, as listeners know, I chat GPT'd myself and it gave me this really interesting bio, which really did not have much to do with the truth. But I was like, God, Sophia Matveeva is awesome. I'd love to meet her.
That's right.
Okay, so what I'd love to know, so obviously as a venture capital fund, you are an investor, but you have your own investors. So for listeners who don't know, basically a VC, they've also got to raise money from limited partners. So a venture capital fund is a general partner, and then you would have pension funds or high net worth individuals and various other entities, financial institutions investing in venture capital and in private equity and in hedge funds. And I know this because, well, I went to business school and I used to work in a private equity firm. So we were always focused on LPs, and, an email from an LP was always taken very seriously. Um, so I'm curious, what kinds of LPs are interested in funds like yours?
Yeah, I think for the early history for the firm, we mainly had interest from different high net worth individuals, some different family offices that had backgrounds in the area. And we did actually have some institutional interest because my own background was actually previously part of the investment team at Bridgewater Associates, did some work at Google X and some other things in terms of it. So had various background where I had some connections where it helped in terms of opening the door to certain LPs and institutions. But the thing is, deep tech earlier on was pretty new. And also for
Mhm.
smaller venture funds, it's harder to raise bigger institutional capital, like you're
Yeah,
saying, with
that's
pension
normal.
funds and endowments. Yeah.
Yeah.
But I think at this point, it is actually expanding quite a bit where there's a lot of interest in the particular area, both in early stage venture, admittedly in part because more recently, say second half of 2022, some late stage venture has not looked quite as good. But a lot of this deep tech stuff has been percolating for a while in terms of the impact of it. And ChatGPT, I think, threw the door open more for popular awareness, even though a lot of this stuff has been going on in the background even before ChatGPT made it popularized with consumers.
Mhm. So from what I've been seeing is that young VC funds tend to raise from family offices and individuals. And then as they build up their track record, they basically go up further as institutions. And that seems kind of the route that you've also taken. But I'm curious, how much do your investors need to know about deep tech to understand and to fully appreciate what you're doing?
Yeah, in terms of truly specifically understanding, that's kind of what you hire a financial intermediary, which is what VCs ultimately are, to do.
Mhm.
Uh, they need to understand at least some characteristics in terms of deep tech, like the one I mentioned, where you can't really pivot as well. It's not just about the team. You actually need some expertise or some understanding within the VC in terms of what the particular technology is, does it work, things like that, in order to actually make the entire thing work. So from that perspective, just knowing that, I think, and then picking the right team to do it in the sense of VC team, I think is what's needed. It's just like kind of getting a contractor for your house. You can kind of generally know this is kind of what I need and this is the kind of contractor I need. But once past that, it's like that's kind of what you're hiring out for.
Mm-hmm. So I'm curious, how did you get into this? So tell us about your journey. Actually, what I'm first interested in. Would did you start your career as a technical person or a non-technical person? Somewhere hybrid of both.
So I did do high school programming. I don't know if that fully counts as technical at that point, though. So yeah,
Well,
it is kind of.
did you? Okay, did you enjoy it?
I did like it, though.
Okay, then that
As
counts
a
as technical.
typical. Sure, sure, sure. As a typical high schooler, it's sort of debatable how, much I paid as much attention in terms of, but yeah, it's like I liked it overall. I mean, the funny thing in terms of this is, yeah, this is probably a really big career transition where I
Mhm.
did philosophy and economics in college.
Mhm.
So I definitely would not be counted as technical within that perspective. Yeah, I've always been interested in technology. I did grow up in the San Francisco Bay Area, so that does help in terms of seeing technology around. But I wasn't myself technical. I actually kind of ran away from that because it's like, well, San Francisco Bay Area, I want to do something different. So philosophy and economics. Went and did microfinance in West Africa and other things, so very different from it, and ended up at Bridgewater and whatnot, as said. But the
Wait,
funny
hang on.
thing
I
is, and
want
I
to
think,
know about some things about Bridgewater. Is it true the whole
sure,
radical candor thing?
yeah, at least
Okay,
during the
can you,
time period I was there.
how does it feel? Because like I've read, actually, you know what? Let's tell people what is Bridgewater. Do you want to tell people what Bridgewater is? And then I just want to ask you about, like what it did to your ego working there.
Sure. I mean, it is one of the, depending on how you count it, the largest or one of the largest hedge funds in the world. It's been quite successful. And one of the big tenets of it that Ray Dalio, at this point, who's become like a LinkedIn influencer in his semi-retirement,
I
is
know.
basically promoting
I
its
follow him on
principles.
Instagram. He is really good. I love his Instagram account. And also his book Principles is, I think it's worth reading. Got good
Yeah.
diagrams.
Yeah, totally. I mean, I was around when he was still figuring out the squiggly lines and other things. So a lot of things
Yes,
that
the
did end up
squiggly
making it.
lines. Okay, so
Which a lot of more technical folks complained about because technically you're going backwards. And anyway, whatever. But putting that
okay,
aside, but yes,
so
good. It's a
basically,
good conceptual.
before Ray Dalio became an Instagram influencer, he built a hedge fund which manages billions of dollars now, and they are known for basically ranking people when you leave, like when you're in a meeting. After a meeting, everybody ranks each other essentially for their participation, and if they think you're a moron, they're basically supposed to tell you that you're a moron. Is that an accurate description?
Well, so I think that as far as it goes, that would be a lot of just from a practical perspective, if you think about it that way, that's a lot of work to be doing after every single meeting. And, typical sort of company, you have a lot of them. It's so when I was there and while I was, doing stuff on the investment team, it was much more along the lines of, look, one is if you have a problem with someone, don't talk to their face about it and so just say it
Mm-hmm.
directly, which sometimes can get kind of confrontational if you're telling them
Mm-hmm.
something pretty directly. Two, just make sure to actually sort of seek truth in terms of it, even as hard. And then in terms of three, yeah, like a lot of things are recorded, a lot of records on different things or whatever. But in terms of like how much you actually go back and like listen to recordings or whatever, I don't think I've ever really gone back, or many people have really gone back and deeply listened to recordings except to catch up on meetings that they missed and stuff like that. And usually at like 3x speed or something. So it's in practice, it's not quite as extreme as it sounds. But yeah, a lot of those things are implemented. A lot of the conversations are quite hard. And in certain cases, yeah, you end up having cases where egos are not just bruised, but quite battered in terms of it. So it does take a certain type of personality to be okay with or even thrive in that ecosystem.
But that really sounds like academic debate to me. So honestly, it really sounds like a lot of the discussions that we were having at the University of Chicago, or when I'm teaching at universities and discussing curricula, like essentially, like to have real academic debate and move thought forward. You, I mean, I was going to say you can't pussyfoot about. Is that a word? I think that is a word. Okay, listen. Now I'm curious. What happened? So you're being radically candorous in this hedge fund.
Okay.
Ray, your boss is becoming an Instagram influencer. What happens next?
So for me, it was in part. So Bridgewater, just for context as well, is a global macro fund. So as far as it goes, it's looking at the world, understanding from a macroeconomic perspective what's going on. A lot of people talk about stock picking or whatever. It's not stock picking. It's more like how is Germany doing versus the US? And then interest rates and equities and other things like the markets themselves, how do they compare to each other and stuff like that, currencies.
Mhm.
So it's a very, very high level. It's kind of ivory tower in a way, in the sense that
Mhm.
you can sort of smooth out a lot of the ambiguities, a lot of the difficulties, a lot of the people aspect in the world if you just operate on a very, very high level. It's like
Mhm.
abstract math in a
Mhm.
way. I saw a lot of exciting things happening in technology, still sort of following along with it, especially in terms of how data centers were evolving, how some of the differences in biology were evolving, and got pretty excited about the direction that that was taking and wanted to be closer to it. That's why I basically decided, I'm going to leave. I'm going to do an MBA somewhere in the Bay Area. Ended up at Berkeley because of that. And I want to actually get into this stuff and start looking at it more. So I actually went pretty much from non-technical to immediately jumping in and trying to really wrap myself and immerse myself in that ecosystem. And I think for listeners, depending on how deep you want to get into it, I think it's a good example that it's kind of never quite too late. I mean, yeah, it was during my MBA, but I was pretty far into my career at that point. And I now regularly work with PhDs, both in terms of the companies, but also the investment team actually is mostly PhDs or whatever. So
PhDs in computer
it's an
science.
example of how far you can take it.
Mhm.
PhDs in material science, microbiology, and whatnot. So one of the things I took advantage of during that time was Berkeley lets you do electives in other departments.
Mhm.
There's nothing actually technically saying that you can't do PhD seminars in the computer science and statistics department. So I did.
Mhm.
Confused the professors quite a bit, and confused me quite a bit in terms of having no idea what was going on a good portion of the time at the beginning. But I sort of jumped in head first, got very involved in the tech ecosystem, and that was actually what planted the seeds for me being able to actually go and make the VC work, which itself is a kind of funny and strange story in terms of falling into doing VC, which I did not plan to do.
So, well, I love a funny and strange story, especially because, in Silicon Valley, MBAs don't have, they're not as in demand as I would say they are probably in New York. So there you are with your MBA, you're in Silicon Valley. That's in itself kind of a bit of a controversial choice. So how does that lead to venture capital?
Yeah, so in this particular case, it was a couple of MBA classmates who went off and decided, hey, we want to do a VC firm. I told them it's a terrible idea. Money management's hard, all this stuff, et cetera. You have no edge right now, which you kind of need an edge to make the thing work. And they said, yeah, that makes a lot of sense. Went off, did it anyway. So what ended up happening for me was I ended up getting reeled in bit by bit. It's sort of like, hey, James, you were right. It's kind of hard. And it's like, would you be willing to help? And little by little, they kind of reeled me in when I wasn't expecting or planning to do VC at the time. And eventually, before I knew it, it was like, you're spending so much time helping doing this, and there's other things, and it's really looks really good for LPs in terms of some of your background. You should probably just join as a partner. So
Mhm.
that's kind of how I ended up in VC. And admittedly, actually, it's not that uncommon a story. I
Mhm.
don't actually find most partners at VC firms have a conventional story falling
Mhm.
into it.
I was
Usually
actually,
it's something random.
yeah, I was about to say that every single venture capitalist that we've had on here, it has, well, one of the patterns I see is that they would know the people in the fund where they join, they would know them for a long time. And sometimes it's because they really
Hmm.
wanted to join that fund. So they basically found a way to meet those people, and then, they did whatever they needed to do to basically be in proximity of those people and kind of show who they are. So that's the case with Czech Warner. You can listen to an episode with her. I'll link all of that in the show notes. Um, Other people kind of had more of, their colleagues were setting up a fund, but essentially it is not the kind of process, especially at senior levels, where people apply for a job or where people get headhunted. It is so relationship based, in my view. And in general, again, it is also not a career that people start off with. It's usually a second or a third one. So after working in startups, after doing something else. And actually, in your experience, how did you find working with startups, being investing in startups, having never worked in a startup yourself?
During the time during the MBA, I actually pretty rapidly went through a few different startups and whatnot. And as I said, dropped into Google X for a bit, founded my own startup and other things. So I did actually do the startup journey very quickly during that particular time. I think it was part of that immersion environment where jumping into PhD seminars, doing startups and whatnot. And I would actually say that to your point, that's extremely valuable
Hmm.
because being able to actually know what it's like being in a startup, knowing the fundraising process, knowing a lot of these other things, and having empathy for what the founders are feeling, extremely important in terms of being able to connect and sound reasonable to them. Because I think other folks who come in from, say, pure finance and jump into the industry directly have a lot of trouble really understanding where folks are coming from the startup side, knowing what's sort of occupying them and everything. Uh, so yeah, I think it's super useful, and I've always advised people try and break into the industry. Definitely go into and at least work at a startup first, especially an earlier stage one, just to get a feel for it, uh, before just directly jumping in.
So I always tell founders to actually avoid VCs that don't have experience in startups, basically for that reason, because generally, in order to work in a venture capital fund, you've probably gone to a really good university, so you're kind of really smart. And what I see, especially in the UK, that somebody would have gone to Oxford or Imperial or Bristol or whatever, then they work at BCG or McKinsey or Goldman Sachs, and then they become a venture capitalist. And I think, well, so this person has never taken a risk in their life because, like, what can really go wrong if you join, I don't know, Goldman Sachs straight out of Bristol University? Like nothing. You're going to be fine forever. And then essentially you start working with somebody who has a huge risk appetite, who could also have taken that path, but instead of, earning lots of lovely money, they decide that no, I'm going to be broke. I'm not going to go to Whole Foods and eat organic food. I'm going to sit here. I'm going to worry about cash flow problems. I'm going to write cold emails to people who don't respond to me. And this is what I'm going to do instead. And then you have that very risk averse ex BCG person giving advice to this
Right.
founder. And it can't work. Even if the advice is good, it
Absolutely.
just won't be taken well because the founder is going to think, well, you asshole, I don't care.
Yeah. Yeah, totally. And I was about to make that point. It's like there are people who give great analyses of like how the business works and everything, but if you don't have that level of empathy and connection, it's not the same thing to just say facts to people and also versus connect emotionally. And VC is a very, very long-term business, which is partially why it's such a relationship business, just like you were saying. You're stuck with people, both in terms of your partners and the startups for quite a long time. It's not typically like, okay, a year or two and then it's okay. It's like a 7 year potentially
Longer
or
than a
more sort of
marriage.
thing. Yeah,
It's
longer than
so
the
I've,
average marriage.
yeah, I've seen the stats that basically your relationship with your investors as a founder is going to be longer on average than a marriage. And I think, how much would a normal person expect to, get to know their future spouse? You don't just kind of have 3 dates and then you're like, here we go, that's it. let's sign this thing. Whereas I kind of think
Totally.
or I don't know, is there like a Vegas version of venture capital? You go to Vegas and there's a fake Elvis impersonator marrying you.
Kind of. I mean, the funny thing about that is just thinking about that analogy, because yeah, I haven't quite thought about it in that way, but it's a lot of VCs actually promise you, I will do a minority check and get out of the way. Like I'm value add, but you'll never hear from me again. And maybe that's a value add. It's kind of like it's like a Tinder date or yeah, Vegas sort of version of it. And that
I've
can
heard that and
work.
it was a
And
lie.
I mean, for certain ones, I think the challenge for them is like some of them don't stay out when things go bad, which is exactly when you don't want them to show up. It's like,
Mhm.
I'm already stressed. I already got problems. You didn't help me before. And now all of a sudden, when things are bad and the most stressful period of this, suddenly you show up. It's like, yeah, that's sort of the worst of all worlds.
Yes, yes. Anyway, probably wise I don't say anything more here. So could you tell us where could listeners learn more about deep tech. And remember, we have a business audience, so we
Mhm.
probably don't have a bunch of microbiologists listening, but we do probably have a bunch of MBAs and investors listening. So where can they learn about the kinds of stuff that you're investing in?
Yeah, so I mean, one is our website. We do actually put out a lot of material and research and whatnot. So creativeventures.vc. I'm starting a Substack too, which I guess is a popular thing since I've had a lot of people ask for explanations on a lot of the AI stuff right now and sort of what's myth and what's real. So
Mm-hmm.
that's also at Weighty Thoughts, like
Mm-hmm.
weight and then why,
Mm-hmm.
weightythoughts.com. So those are two places I can definitely point to in terms of
Mm-hmm.
stuff that we own in terms of it. I think there's a pretty good report from BCG and Hello Tomorrow, like talking about the definitional thing again,
Mm-hmm.
about deep tech and deep tech investing and how it's different. That I think is a good starting point and introduction for folks as well.
Mm-hmm.
So I definitely encourage them to look that up and get a sense of the sense of how these technologies and how this environment is different.
And as an investor, what kind of technologies or trends are you particularly excited about in terms of deep tech today?
I mean, one of the interesting things here is I talk about these things as distinct, right? AI,
Mhm.
robotics, synthetic biology, advanced materials, and a lot of these falling into our own thesis points in terms of, healthcare costs, aging populations, and labor shortages and climate change. But these things are all kind of merging together in very distinct and very actually like explicit ways in the sense of AI is being used more and more to design materials and also look at and understand different interactions in terms of synthetic biology, biologics, things like that. And a lot of the biology is actually starting to flow into thinking about how to change computing and whatnot. I think DNA-based storage, which is a concept that a lot of people are pushing in terms of using DNA to store stuff and store versus hard drives and solid state drives, is a little early, but a
Mhm.
lot of these concepts and whatnot are all flowing together. So I think
Mhm.
one of the things that people should watch out for, not watch out for, but just kind of be excited about and interested about is in the future, a lot of the pills and drugs that you take will probably actually be designed by AI, grown through a synthetic biology process in terms versus chemistry, and potentially be produced, say, on machines that use advanced materials that were designed by AI. And your iPhone, other things in terms of this, all of that will actually change probably within the next 5 to 10 years, which is partially what makes this such a huge market opportunity too. If you're thinking about, we'll look at the landscape that we have today for the index of the market right now, like
Mhm.
the FANG companies in terms of Amazon,
Mhm.
Facebook, et cetera. This was from the 90s in terms of the software revolution coming up and basically taking over a lot of the market cap of the entire market.
Mhm.
You're going to see the same thing coming up in the next period, except
Mhm.
it could even be larger because there's always a natural limit in a way in terms of how much digitization and like the digital world and software can take over. This is actually directly interacting with the physical world. So I think that's just something really exciting, interesting, and potentially scary in a way if you just don't pay attention to it and sort of get a good understanding of where it's going, of what's coming up in the future.
How exciting. Well, I'm excited. And penultimate question. Are you guys doing anything in the quantum computing space?
We did have a company that works in that particular space. I think the challenge here, and maybe a good illustration actually of the challenge of deep tech investing, is that most quantum computing, especially for general quantum computing, is just one or two breakthroughs away from working. So that
Mhm.
breakthrough could happen next year. It could also happen 10 years, or it could happen 10 years from now. So that's the challenge for if you're an investor trying to actually make something work. There's enough challenges in starting a startup, in doing the engineering to scale it up, and to do the sales and distribution and scaling it up without needing to actually have a scientific breakthrough that hasn't happened yet. We invested in one company that does very specific quantum computing in terms of application specific quantum computing. So that was one that we saw actually could work, does work, and et cetera. But we generally don't invest in it because it takes those breakthroughs. And that's, I think, one thing that people also misunderstand about us, even within the VC ecosystem, that I think is actually relevant for the listeners of your podcast. most people look at us and say, you're fearless about taking technical risk. We say no, because the funny thing is we're a tech oriented group and fund and people that actually the tech is just a checkbox. That's usually the simplest part of all of our due diligence, and that's the least interesting part of our value add for startups that we work with. It's pretty much, does this thing work, and is it proven to be able to work, and does it have a viable path for scaling up, which is usually the challenge, scaling up from a technical perspective or not. That's a checkbox question. That's a binary yes or no. The interesting part, the nuance, the thought process, the difficulty in executing it is thinking about what's the right business model, what's the right market to first enter into, licensing or joint development agreements or something else in terms of actually setting this up. It's all the business side, actually. That's the hard part about trying to get these technologies, which are usually super general purpose, to actually scale and get to market. So I think that's an interesting thing to think about for folks. It's like you can actually understand the conceptual portion of the technology or check to make sure that it's just check the box work and then be able to do it versus, obsessing over it and just falling in love with the technology, which we see actually as a problem for certain funds where they get too obsessed with the technology and forget about the business.
This actually reminds me of the conversation I had on here with Colin Byrne from Two Sigma Ventures, and they invest a lot in AI. And he was also saying that essentially, look, yes, technology, like that's a given, but it's about commercializing innovation. Is this a business or not? Can it scale or not? Because at the end of the day, we're financiers, we need to make money. So I see kind of an interesting parallel. And, I was just at the Financial Times Weekend Festival this weekend. This is how I rock and roll, how I spend my Saturdays. And I heard somebody say that one of the speakers said that in 1994, it was predicted that quantum computing would break encryption. And I didn't realize that this was actually the case. But when you actually look at the history of kind of the internet and innovation, a lot of the AI that we're using now, it was actually being developed in like the 90s, the 80s, even earlier.
Yeah. Yeah. I mean, it was the 80s, the Lisp machines and whatnot. Well, going to the 90s, it's like, yeah, AI is going to revolutionize things. It's definitely going to work. It's definitely, and yeah, it just sort of didn't, like, continuously. Yeah. And that's ultimately the challenge here. You can look at a technology, fall in love with it, and over extrapolate what it can do. Because just like the AI thing in 80s, 90s, by the way, genetic therapies, gene therapy, like also promised in the 90s, still hasn't really taken off in a huge way, even though there's some viability to it now. You can fall in love, decide that this thing is going to completely change everything, and just extrapolate the curve out to ridiculous levels, but not actually stop and realize that, yeah, it's only been proven to be able to do this, and from a business model perspective, this is actually what's valuable and what's actually going to go to market. It doesn't just scale exponentially on its own. So that's the interesting thing to think about for it, and that's actually what excited us around 2016, seeing a lot of these technologies come to viability. But before that, they were just theories in terms of maybe it'll work or maybe it won't.
This actually makes me think of kind of dating. How you meet somebody and you think this is the solution to all my problems, and then we're going to fall in love and everything is going to be great. And then, we will be there together, I don't know, receiving the Nobel Peace Prize.
Right.
But and
or,
and then
or
it's
maybe
like, well, like, I don't know, you've met them, like you had one date, maybe give it some time. And I think this is the same thing with technology. It's like, look, there is this thing, it can do this, and that means that everybody's going to use it and it's going to change the world, and we're going to be billionaires. And you think, well, okay, both cases are, maybe it could work, but get to know each other. Take some time.
I mean, maybe stretching the dating analogy too here. It's like meeting someone that everything is perfect except for that one kind of big thing, and it's like, I can
apart
fix
from the axe murdering
or whatever. Yeah.
Apart from the axe murdering, everything is fantastic.
That's right. It's like, I can fix the person. And then it's like, Yeah, that often doesn't work out in terms of it. So yeah, I think the analogy
Yeah.
does fit.
So actually, so my last question, James, is will you send me a vibrator?
Oh, yeah. I mean, I'm happy to do so.
And so would you like to tell the audience why I'm asking you to send me a vibrator?
Sure. I mean, one of the startups that I had started up, and it's still going, by the way. I'm less involved these days, more so just from a board perspective. But one of the startups that I had started up with a engineer, Amazon Lab 26 folks, and actually my now wife and whatnot, is a smart vibrator startup that basically uses sensors to detect, measure, and understand pelvic floor contractions in terms of arousal and orgasm for uh, basically essentially women in terms of it. We've actually had trans women as well use it and whatnot, and actually been used in therapy and other things. But that's overall a really interesting company, I think, in a taboo space that's applying technology in such a way to try to both destigmatize it from a social perspective, but also try to push forward a lot of different understanding, research, and therapies in the area, which again is really underserved. If you look at it, it's one of
Mhm.
those things where there hasn't actually been that much research since sort of Masters and Johnson and Bolin era. A lot of that's actually gone into social science, which is fine in terms of surveys and whatnot. But physiologically, we actually haven't really done much work in that particular area. Just like all areas of healthcare, I think that it's a really important thing to be able to actually do more research and understand those things.
Well, I am completely unobjective, but yes, I totally agree. And so, listeners, I think we have had a really wide-ranging conversation, probably more wide-ranging than you expected. But we're here to we're here to educate you and also to make sure that actually you enjoy the education that you're getting. So, thank you so much, James. It has been a pleasure, and I'm so glad that you joined us today.
Yes, absolutely. Thanks so much, Sophia, and love the conversation.